Well, hello there, everybody. Michael Silva. Guess what? It was a nice big green day in the market as that PPI data come in less than expected. The market went on an absolute tear. All the 11 sectors, -1, real estate, was up, and the VIX closed at a new low. Awesome stuff. In today's stock market brief, today's title is called Bank Earnings, Expected Moves, and Market Indicators, Uncovering Trade Ideas for the Savvy Trader. Yes, not only are we going to be going over expected moves for the financials that are reporting pre-market, we're going to give the expected moves for the indices, give you some price action charts, and I'm also going to share some ideas, some things that are setting up that you should be made aware of for the weeks to come. So let's get into it. Oakley dokley, everybody, artichokely. Yes, PPI data came out. Actual was -0.5. Consensus was 0. The market looked at that and said, Yahoo! Except for NVIDIA and AMD, which is important because those semiconductors are a very important product in the NASDAQ composite. So I don't know if this is telling us an insight as these guys also had the lead on most of these other products, and now they're starting to back off. We'll continue to monitor that and see what takes place. But also going into tomorrow, we have retail sales at 5:30, and we also have Michigan consumer sentiment. Now, I don't know if this is going to be foreshadowed or overlooked because of the bank earnings that are coming out. But before we get into the expected moves of these bank earnings, I want you to take a screenshot here. These are the daily expected moves. This is something that I share with my Patreon group, but I'm going to share it with you today. The reason why is because these are important to know. They were important to know also, including the 2 Sigma move, today's trading session, which we hit those 2 Sigma moves on that crazy green day. So it was important to know those levels. Now, go ahead and screenshot this and you mark the upper, the lower levels of these products of what the options market is pricing in as far as risk. You can also mark those 2 Sigma levels if you think we're going to be getting outside. Remember, 68% of the time, right? If you think of this as a bell curve is one of those things that look like this. Yes, the bell curve monster. And then it goes like this, which is a 1 Sigma move. 68% of the time it finishes within there. 95% of the time, or somewhere right around there, I don't have the number in front of me, it finishes within the 2 Sigma level. Okay, let's look at what's reporting earnings pre-market. Okay, we have BlackRock, Wells Fargo, Citigroup, JPM, UNH, United Health Group. This is all before the open, okay? PNC is another one. And I want you to go ahead and screenshot this one. This is what the options market is pricing in as far as risk. You can see the daily expected move for these products as we're moving into the last trading day of the week, and they are reporting earnings. So it's likely to see a lot of these products, they could very well hit 2 Sigma moves, but it's important to mark the upper level and lower level because when they report, it's very likely to see price go and tag the upper level and or the lower level. So it's just a good gauge as far as if you are looking to set up some types of trades to be aware of these levels. Now, what's interesting going on here on this indicator, this is the zones over here. The zones are a way that I can quickly manage and look at what things are overbought and oversold. Think of them as advanced Bollinger Bands. I track these and I share them with my Discord group. If you want to look into the Discord, I'd charge only $9 a month or even cheaper if you just do it annually, and you get access to this. I update these daily. It gives you basically the indicator itself. It tells you, okay, there's a low point, a midpoint, a high point. We talked about this one yesterday where, hey, the S&P 500, right? It was still above the midpoint, which means what? It means it's still rather bullish until it starts breaking that. And you can see that, well, we closed at 41.46. We are still above there. However, you can take a look at the upside and downside. Where is price relative to the high point or the low point? And you can see we have 1.87% upside in this S&P 500 to around 4% downside to the lower end of the SPX. And if you take a look at the VIX, you have about a 19.72% upside to about an 8% downside. When it gets closer to the low side, this will start lighting up green. And this is why I'm pointing this out. The dollar still remains green over here. As you can see, we close at 101.00. The low end is 100.58. So it's saying that there's minimal downside, some good upside to the dollar. Why is that important? It's because if you take a look at some of the other asset classes from an intermarket perspective, what do you typically see if the dollar goes up, which it's hitting the lower end? It's possible that we start to see it move up. Well, what's at the higher end? Gold. Gold has been on a monster tear. It hasn't digested its move at all. Okay, and we'll talk about this a little bit later, but I want you to remember this when I show you these charts. SLV, same situation, is starting to light up red. There's a couple other products in here like that, not really necessarily have to do with the dollar, but XBI, right? Biotech. You have healthcare lighting up red. You have financials lighting up red, and they're reporting earnings tomorrow. Gold futures, right? And then also Bitcoin there too as well, just to mark out a few things. Now, if we continue on, I want to look at first the SPY, and then we're going to move ourselves down to some of these trade ideas that I kind of see developing. The SPY, we hit that 2 sigma move. Okay, it broke. This was the daily expected move for today's trading session, and you can see we came up there, we consolidated around, and then we started breaking out of this level that we were looking at yesterday, started just ripping all the way up. It was just definitely a trend day. Going into tomorrow, the daily expected move, you can see it's right there near the weekly expected move. So if we start pressing up higher, this would be the place to obviously look to take some profits. Now remember, right, if we start looking at a couple of indicators and overlay them, you have the RSI, that's an overbought condition. So this run was pretty strong. And then you have the PMO still pointing up, but if this starts curling over, that could be a bearish crossover where you start to see the price action digest. Now, if it starts digesting and you're looking for a potential opportunity to play, a bounce, well, where can you look? Well, you can look towards the lower expected move. You can potentially do a retracement from this low to here, and you might look at the 50%. It's right around that area. So if it comes down into this area, it could be very well flagging. You'd have the week to date, month to date, and the 5-day moving average starting to curl up, and then you might be able to play this up further as trend continuation. That's an opportunity. As it stands right now, this isn't necessarily the place where I'd be like, yeah, let's pile in long and then hope it goes to here, right? I like to see stronger consolidations. I like to see pullbacks into solid areas and then to start buying strength from that. I don't like to chase when all of our indicators are starting to roll over and they're a little bit overextended to the upside. Now, when I take a look at this chart overall, where have we been? Well, we're starting to break out of what? This chop zone over here. So as open interest has been building, maybe this is where we start to get some sort of squeeze to the upside. However, I will show you the Qs. So the Qs broke and had a 2 sigma daily close. I think it's actually trading right around back within that as it stands right now in the aftermarket session, but that's to change. But if I look at this chart and I'll bring up the new daily expected moves, what have we been doing for the last 10 trading days? We haven't done anything for the last trading days. And what have we been doing for the week? Well, the week closed, the last week closed right here. We're right here right now. That means we're up, what, 0.38% is what it was when I pulled it. Okay, so all this big move, all this FOMO, all this acceleration, all this happiness, we're up 0.38% for the week. It's been a big move up, and then we gapped down, and we moved up, and we moved down, right? We finally moved back up again, but we moved up here, and we went down, and we moved down. Okay, so we're just overall in this market, which I find interesting, is we're just winding up open interest, and we can very well see a strong move like this and get faded right back down. But from a bullish perspective, once again, we are above the week to date, month to date, quarter to date, anchored VWAPs, and we're also above that 5-day moving average. So what you look for is pullbacks and to buy into strength. Do not chase up into these areas, because if you chase up into these areas, you can get lucky, but that is a losing formula if you do this for the long run, right? You can get lucky a couple of times, but the moment it doesn't work, it could really affect you, especially if you're not paying close attention to risk. But yeah, RSI's was overbought conditions starting to move over, and this is starting to roll over there too as well. One of the interesting things that I pointed out earlier was I just find it interesting how AMD and NVIDIA, they were up a lot on the day, but they completely rolled over and none of the other products did. So what is semiconductors telling us? Semiconductors are known as growth, and growth typically leads the way, especially coming out of bear markets that we've seen in history tells us that. So if these start to roll over, is our other big kind of growthy names going to kind of follow suit? And I couldn't tell you, right? We have a lot of stuff taking place tomorrow, so we got to really see how the market wants to digest that. And that's why it's so important to know not only these levels, but also these expected moves in tomorrow's trading session. Now, I want to get into a couple other interesting kind of setups that are taking place. This is one that I shared on Twitter, and I wanted to call out the gold miners bullish percent index. This is the weekly time frame. It is moving into overbought conditions on the RSI, and we haven't been there since really April, and we haven't actually had a reading this high since last April too, and we know that that marked a peak as we started to pull back down. Now, I'm not calling for a big move back down because I know in this current macro environment, miners do typically well, gold does typically well, and even the dollar can do typically well in this environment, which it hasn't been doing. Okay, if I pull up the gold chart or gold miners chart GDX, you can see that we've been on a monster move here with pretty much no pullbacks. So my thought process here is I'd be looking at this as a potential gold, a holy grail setup. So I'm not going to be buying up here. Like a lot of people might look at this and be like, oh no, I'm going to FOMO and move in. Not really when the RSIs are way up here. Not really after all of a sudden this big move, and not when we're this disconnected from the 20 EMA. So my opinion is as long as the ADX can hold above this 30 marker and we get some sort of consolidation, this price pulls up and we start flagging, that would tell me that we can do a potential holy grail setup where you buy into it. And if you don't know what that is, you can just Google holy grail setup figuring out money. I have a little short YouTube video, it's like 30 seconds long, that shows you how to trade that, and you can play it back to the high or potentially even higher. So I would not be buying gold miners here. If you want to look to short, you'd be short, there'd be a fade trade just to reconnect to the 20 EMA, so you have to be a little bit aggressive, but it's something to be aware of. The last one I want to talk about is obviously the Saylor to Schiff tool. It is pointing down. It hasn't crossed down through that zero line yet, but it is setting potentially up as a short opportunity, because the times that we get these cross downs between Bitcoin relative to gold on the 4-week rate of change, we have seen massive sell-offs in the price of Bitcoin. We saw little sell-offs, right? But we've seen big sell-offs as well. The most recent sell signal was right here, and it was basically right here if you see, and we saw this big hit to the downside, and then it recovered, went on a buy signal, and we started seeing this rip back up over 30,000. Well, we're starting to turn down now, and a lot of not only cryptocurrencies like Bitcoin or Ethereum are starting to perform very well. Understand that there's also crypto equities that have made a huge run already that haven't really digested anything yet. So my thought process is if we get the sell signal, to start paying attention to crypto equities that may have gone too far too fast, and they may need to digest, they may need to take a little bit of a back seat before their next leg up, or it might be over. We don't know. So a couple of those is like Mara, right? Mara had built this monster run up, right, from 3 to 9, so a huge move, right? And then we started consolidating, chopping around, putting in higher lows, and then we just recently broke out of this 9. So very strong breakout. We've been seeing pockets of accumulation, some strong volume. So this is a positive sign. But remember, things get overextended as the RSIs move into overbought territory. This thing has been on a huge run. Do you think it's unlikely to see a pullback to $9 from potentially 12? Absolutely not. That's more than normal. That would just be a reconnect to all these moving averages and retesting this breakout area. So that is potentially setting up for a fade trade. You have to manage risk very carefully here, obviously, as these things are known to squeeze very fast. So I would like to see that sell signal trigger before doing anything crazy there. Another one would be obviously MicroStrategy. This is running into a prior area of resistance that it was also support, and you can see we're coming into that area as it stands right now. If you just look at where we were at 2023, at the start of January 2023 to where we are now, right around 350. I mean, we're talking 150, 160% gain already year to date. And we just saw, once a pullback right here, and now we've been kind of on this straight run up. So yeah, at some point we're going to get some sort of a pullback, some sort of consolidation. And when we get too extended from these moving averages, remember, we can see big moves, big moves back and even big moves back up, right? So something to pay attention to going into the potential flip of this signal. So that's all I got for you on today's episode, everybody. Hope it helped out, gave you some insights. That was a little action-packed and a short period of time. See you later.